This is the Co-Living Inside panel discussion hosted by 777 Capital Partners. Quick intro maybe, 777 Capital Partners is a new investment boutique founded by several leading real estate industry experts, many of who you may know. My name is Michael Kamar and I'm responsible for investor relations. Our main business focus of 777 Capital Partners will be on off-market, value-add and opportunistic deals, both in the commercial and residential sectors. If you have not done so yet, I recommend you to visit our website for more information about the founders, our business activities, and already a few of the first industry insights that we've published. Now, you may have noticed that we've been quite busy launching over the past few weeks, and we've engaged in quite a lot of content so far. We have quite a few interesting topics. The first one we started so far is actually co-living. At 777, we put a special focus on niche topics and opportunities where we believe we can maximize yields in the highly competitive real estate asset class. So let's get started with the panel discussion. We'd like to give a few insights into co-living, an emerging sector that we believe is highly attractive for tenants and investors alike. To provide some first-hand insights into the ins and outs of the industry, it's my pleasure to introduce the three distinguished panels we have today on board. First, we have Esther Bane. She's co-CEO and Chief Marketing Officer of Quarters, the largest co-living operator in the US and Europe. Esther recently joined from BMW, where she served as the Global Head of Strategy and Innovation, as well as the Global Head of Brand Management for Mini. In that role, she found the premium co-living brand Mini Living, the influential design hub ADO, and the startup accelerator UrbanX in Brooklyn. Before her time at BMW, she also founded and ran social innovation at Audi. Our second speaker is Ralph Winter. He's been an entrepreneur in the real estate industry for most of his life. To date, he's been involved in transactions worth over 30 billion, and he's the co-founder of Corsair Capital, today's Germany's largest real estate investment manager, second largest real estate investment manager, as per the latest Bell report. He was one of the pioneers in student living some 15 years ago, and over the past 4 years, he's built a substantial real estate business with his family office in the US. Last but not certainly least, it's my pleasure to introduce Frank Perschke, who currently acts as an advisor to Quarters. He's a supervisory board member with several real estate companies, including Deka Immobilien, ECE, and Varianos Real Estate. Some of his former engagements were President EMEA Markets at JL, CEO of Eurohypo, and CEO of Commerz Real. In this panel, we would like to give you an overview of co-living, what it is, why it's so relevant today, and where it fits into the residential real estate market. We'll hear from Esther about the operational aspect of the business. Ralph and Frank will somewhat focus more on the highlights of co-living and why it's so compelling to landlords and investors. So let's jump in. Ralph, maybe you first. You're a pioneer in real estate, and early on, you identified student housing long before it became an established sector. Can you tell us why you find co-living so attractive?
Yeah, thanks, Michael. Yes, hi to everybody. Very happy to join this discussion today. Yeah, Michael, as you just mentioned, so we are back. We are 777 is a new venture we do, and it's a pleasure to do that. It's kind of the youngest member of the family now, so I was very happy to launch that together with my best friends and long-term successful business partners, Thomas Landschreiber and Misha Blattmann. Yeah, and we have a great team. You know, we were looking for the best talent in the European real estate market, and I guess we have a great. We really did well, and yeah, so we're a little bit going back to the roots as how we started, let's say 15 years ago, to invest our own money together with a bunch of selected investors and friends. And so I think this is more or less the same approach I was doing with my family office W5 over the last 4 years in the US. So let's just start with my motivation to invest into innovative living and how I'm gonna define it and what my explanation is. When I started moving to the US now 4 years ago, I was focusing on what is already more than a trend in the US, and it's at the very beginning in Europe. Because that gave me a kind of a predictable outlook for what's going to happen in Europe, what was already successful in the US. And it became very clear and very quickly that the biggest change is how people live, how they live today and how they will live tomorrow. And my summary is that the housing market today is on the brink of a service revolution. Housing must transform to keep up with new demands around services. For instance, flexibility and digital lifestyles. So the pandemic right now made that more valid than ever. I think we all became a kind of a digital nomad. So I decided to invest in innovative living, which is responsive to evolving lifestyle preferences. Let's come into and explain it a little bit more in a deeper way of saying, okay, what are the key elements of innovative living? And these are 6 key elements. The first one is flexibility. Second is community. Third, value. Fourth, technology. Fifth, densification. And a cool design. So where do we find all these key elements? So these are 5 innovative segments where I think it makes the most sense to invest in over the next 20, 30, 40, 50 years. The first one is multifamily. Second is student housing. Third is co-living. We will dig into that a little bit deeper later on. The fourth is micro-living and service living / service living. In the US, a little bit different as it is in Europe. And fifth is single family rentals. So let's dig into a little bit deeper dive into co-living. So co-living is for me one of the next big things. I mean, you mentioned it, just compared to what was student housing, let's say 20 years ago. I still remember how that was. I mean, it was a niche concept. No one was really interested. It was pretty hard. It was a very immature asset class. So it was very hard to find lenders. It was very hard to convince investors. And it was a complete new approach. And when we're going to compare that to what happened over the last years, I would say today, student housing is one of the most mature assets class globally. So what does co-living stand for? You know, I mean, first of all, it's affordable and it's community living. So based on the proposition of bringing people together, it's the most attractive thing, especially for millennials and single people. So, but what does that say from the other side? So how do owners of real estate or landlords, how does it benefit their economic situation? So, I mean, it's pretty easy for a landlord. He's going to cut the building into smaller units, he densifies it, and increases rent return on square meter. You can rent, for instance, you can rent out a 2-bedroom apartment as 3 rooms and 3 beds in a flat share and get, say, 3 times 600 per bed out of instead 1,200. So, I mean, that is not, I mean, this is a kind of, in German, it was called WG, Wohngemeinschaft, a little bit of Wohngemeinschaft on steroids, I would describe it. So the question is for me, is there a place for co-living in the real estate world? That has to do a lot, do we find enough product for co-living? And is it competitive enough to let both ends, the owner and the operator, benefit and survive? This is pretty tough today, as you know. I mean, my guess is the sector is at the very beginning and a lot of challenges are out there. And the pandemic, unfortunately, made it much more difficult to plan for reliable returns. But I think co-living is so worth to invest into it because it's definitely, what is definitely happening is people changed the way of living. They changed it and they will change it in the future. Thanks.
Thank you very much, Ralph. I think that's quite interesting. I think particularly that point, taking it up, a lot of the things that you just mentioned go in the direction of actually what the tenant then receives in terms of the benefits. So Esther, let's move on to you. And I just mentioned Quarters. The most interesting thing I found is that I learned that you joined Quarters in the midst of the COVID pandemic. So certainly not the typical time to change jobs. Could you tell us why you believe in the sector, what made you so interested in it, and yeah, your first experiences with Quarters?
Yeah, I know. It seemed really strange, and then I came from BMW into the real estate sector, so it looks like quite a jump. But yeah, in reality, I mean, I've been over the past years, if you look at what I actually did, I worked in the field of urban innovation for years. So I worked on autonomous driving, mobility services at BMW. And then I realized how intertwined mobility was with other aspects of city life, which is why I worked on a more holistic vision of Mini as a lifestyle brand. We invested in startups beyond the mobility sector, and I ended up investing into prop tech startups, early stage. So I got into that sector quite early, at least from a supervisory perspective. And then I did extensive research for Mini and into their target group, which is younger people, which is pretty much exactly the people we work with at Quarters right now, to figure out what was really relevant to them. And, for us at the time, the problem was that car ownership was continuously losing relevance, right? And so we looked into it, and the number one priority on people's minds was always their place to live, a place in a great location, well designed, something that obviously they could afford. And that's a really urgent need. And, it stayed through the years, it stayed on top of people's minds, and now it has really only sharpened by increasing housing prices, and then now the recent crisis, during which many jobs became precarious. So to me, it was clear that if anything, the pandemic would make it even more critically important to rethink housing options. And I mean, the way we build standard apartment is just outdated, right? They were designed for the nuclear family, but the fastest growing demographic is that of singles. And Ralph said it, that is what co-living focuses on. And amongst that group of people, loneliness is huge. All these studies had shown that before the pandemic, since it hasn't exactly gotten better. And so we need housing concepts that react to how a new generation wants to live and figure out how we make life in the city better for them. Now, in my old job at Mini, I did develop, as you said it, Mini Living, piloted that. It was a premium co-living concept, but within a car company, we couldn't scale it. So I looked into joining the company in the space that was best set up to succeed in scaling innovative housing solutions in general, particularly co-living. And Quarters to me was the obvious choice because they were the pioneer in the space. They had been operating since 2012. And by now Quarters has 3,000 beds live, another 1,500 in the pipeline. We're in 16 cities, and 15,000 people have stayed with us over the years. So Quarters developed the proprietary tech for it. They had the footprint, they had the experience, and they had figured out how to scale. And so to me, that was why I wanted to join specifically Quarters at the time, and realized, over the months in the beginning of the pandemic, that the model was becoming more relevant during Corona, right? There was this moment where you thought, okay, anything, co-working, co-living, maybe that's a difficult one during a pandemic, but in reality, it's kind of the opposite. Already, Ralph pointed out, it's a model that's affordable. It's a model that offers flexible terms, although it's residential. So you get this peace of mind of not having to commit too long term, which makes it quite interesting in precarious times, even through a potential recession. And this is something that rather grows than shrinks. And then I saw these studies coming up. We just had a new property report coming out in the UK that saw an increase of more than 300% in renters ditching single accommodation in favor of co-living. And the key factors were it's more affordable and it's connecting me to other people. And I guess, really all of us, but especially younger people, had this almost like a trauma during the pandemic, right? We had this feeling of isolation, couldn't meet anyone anymore. And living in a community and connecting to a circle of friends increased in demand. And so, I joined Quarters to realize that members called every day in that short period where we had to lock down, the common spaces, and wanted to know, when can we get back together? And we had people calling in that could have never imagined living in a shared apartment, in a flat share. And now we're asking to move in potentially with a friend of theirs, and otherwise just, to live in a small community, because they figured if the second wave was going to hit, they didn't want to be caught in it alone. And so, I think it's quite obvious that the model, is what we need to look at right now. And if you then think about it, the whole idea of co-living was you have multiple functionalities in a house, right? So you live, work, play in one building. And that was meant for our core target group. Our tenants are on average 27. So they're young professionals, of which many can want to work from anywhere. But now, you know, we all have to figure out how to work from home. Ralph said it, we're kind of all digital nomads now. Suddenly we all have to figure out how Zoom is now our office. And we have to figure out how we get more use out of our houses and apartments. And so to me, it's like the moment where co-living is transitioning from niche to mainstream. And yeah, Ralph mentioned the service economy aspect of it. You know, we all are now using everything at the touch of a button, and it got even more sharpened during Corona, right? We order everything online, both the, you know, the car that picks us up, the food that they bring to us, now the Zoom video calls. And people got really used to this, and they got to know how it works in the hospitality sector. Everything is serviced. And this is something they now bring to the residential space. And you see that happening, you know, in landlords understanding that by building more amenities, trying to figure out how to cater for this. And we're just really strong in that segment. We like manage an entire customer journey digitally. So from moving in and across all the programming to moving out, which also is proved quite safe during a pandemic, as it has a second aspect to it. And then, yeah, you know, you have this range of services and experience you can book on top, which is something that you saw, you know, in the hospitality sector coming in through boutique hotels. And that's something customers appreciate, but also building owners, because yeah, they realize it's just not enough anymore to give people the keys to a box and then not show up for 10 years. And people just aren't satisfied with that anymore.
Okay, thank you very much. I think that's quite interesting. And if I stand correctly, I mean, it is what also Ralph pointed on. It's moving away from simply providing a place to live, but really offering a full service package, right? And I sort of had to think about this myself when I started, of course, getting very involved in this topic. Is I moved around several times in my life, and frankly, I used to be the one who had to go into a share apartment, as Ralph mentioned, right? So you have two guys you try to sort of split an apartment with, you have to deal with furniture, et cetera, and usually it's just when you get to a city that you love to get some connections that you sort of can settle in, and that it is actually, I think I see there is a value to it in terms of particularly this community aspect, as you said. And surprisingly enough, as you mentioned, the proof is in the pudding now. In tough times like right now, you even see in certain sectors or certain areas increased demand. Now, moving on from the property owner that you mentioned, it's a very, very good point. I would like to move to Frank. Frank, you've been very much on the institutional side. You've worked at JLL. You work now for several very large asset managers in Germany. How relevant is co-living from a property owner and an investor perspective for you?
Actually, it's already relevant today, but I'm 100% sure that it will become much more relevant over time. We are only at the beginning of a development. And why is that? By nature, investors are more conservative and look at the long-term perspective. So although all after we have listened to Esther, we all would consider to move into a co-living from tomorrow. Yeah? But of course, investors with their conservative approach, they would go through the list of conditions from when on they would invest into that kind of property. And it starts that they are looking for a viable product. They need healthy and sustainable demand. And that's exactly what I think Esther and Ralph have described excellently when they have elaborated on the trends which support the drive that makes co-living very attractive for people in a target group, which is for the younger generation today, but which is certainly growing more and more. And we have seen in COVID times that this wish for this community living in an easy way has grown even more. So I think this is something which is here to stay. And that's what investors wish, because they put a lot of money into long-term investments. So they have to make a forecast not only for 6 months, 2 years, but rather for 10 or 20 years. And the second thing investors look at is, especially in properties which are operationally more demanding than others, they want professional managers. And that requires sophisticated, innovative operators, often adequate size, and if possible, also with an international footprint. And Quartus definitely fulfills these requirements with the size and the footprint it has today. But it's also important for investors that there are several options in the market, that they do not only depend on one operator, but that the market is more established, and if someone does not do to their expectations, they find an alternative. What also investors do prefer is they want to invest into an established and sizable and liquid investment markets. And co-living is getting there. It probably follows on the path of student housing, where it was 10 years ago, and since then has been established as a more and more established investment class. And like in many other cases, the UK and US are kind of the front runners. And as Ralph mentioned earlier on, when you see what has happened in the US the past 10 years, you probably can have a pretty reliable forecast on what will happen in Europe the next 10 years. But also in Germany, for example, CBRE has counted approximately 5.2 billion euros invested into innovative living, which co-living forms a part of. So even today, it is a significant market, which means it's possible also for more core investors to enter this market and invest in that. And also when we look at the pipeline, where reports say that co-living operators are prepared to invest into a further 55,000 beds, that shows the ability to raise hundreds of millions of euros, which is a good sign. And as a consequence, property investment volumes for co-living will further increase, and there will be further yield compression into levels which we rather know from traditional residential. And that is even accelerated by the fact that today, alternatives in other sub-asset classes have rather shrunk. When you see the hotel market, which is in a difficult situation, when you see that retail in some segments is doing is in very challenging times, that gives comparative examples to co-living and will support that it will grow further. So it is certainly on the screen, even of conservative investors.
Okay, thank you very much. Thank you very much. Is there any sort of experience in terms of how much more yield you could expect from a operational asset in the co-living or student home segment, so versus the traditional asset classes that you're referring to, sort of as a comparison? So if I'm an investor, what's roughly I can expect if I go into such a niche class?
That's something which evolves over time, and historically you had quite significant gaps, which may have been between 100 and 200 basis points. Now, with the market where risk perception changes, the gap may narrow to 25, 50 basis points, and something in that range. Okay, super. Thank you. Now, this is now high level. We have Ralph, who's been, I think, very active over the past few years now, also in the US. You have looked at a couple of co-living transactions. Is there anything, any specific transaction that you could maybe highlight and give us a little bit of a sort of, tell us a little bit from your personal experience on something that worked well in the space? You're on mute, Ralph.
Okay, better.
Yep. You're back on mute somehow. Sorry.
So what Frank was mentioning before, I mean, if you see the risk, I mean, where does the difference on cap rates come from? Let's say when we started student housing, the cap rates were so much higher than they are today. I mean, it's a kind of accepting this asset class in a certain way, and I mean, it has to be the same risk adjustment. If you just think a little bit, I mean, co-living is, at the end of the day, you have an operator, but below the operator, you have 50 or hundreds of direct tenant leases, which is more or less a very nice diversification of different credibility among all the different tenants. So in one case, you have a kind of a master lease, if you have it, but if you have a management But even if you have the master lease, it's below the master lease, behind the master lease is, let's say, 100, 200 people having their own credit ranking. And so what I would say is I do not see a big difference from the risk adjustment between the multifamily today and the co-living. That doesn't mean that you find lenders which are easy borrowing money for that, or that you find, let's say, Frank was mentioning it, conservative investors. I would say institutional money right now is hesitating to go into. But I think that is pretty normal. So just let me quickly go into an example. I mean, if I look on such a segment, my first question and the team's question is always, hey guys, where can we get some premium of the rental income, which creates at the end of the day the higher returns? Where does that come from? I mean, and this link then into higher cap rates. So I mean, let's use an example. For instance, I mean, I developed a building in Washington D.C. in the U.S., and it was a 12-floor multifamily. I mean, this was a micro living building, 12 floors, 318 units, and approximately 12,000 square footage, which is 1,300 approximately square meter of amenity space. So we use the ability to densify and convert a third of the apartments, of the normal micro-living apartments of the building, into co-living in order to generate higher returns. So the co-living execution boosts our NOI by approximately 20%, driving yields on cost by approximately 75 basis points. So what does that mean at the end of the day? That means a potential exit before the densification, before the conversion into co-living, would have been approximately, let's say, $180 million US. After the densification and the higher NOI, it comes up to approximately 210 million and plus. And that's a lot. I mean, everybody who understands real estate see what's going on here. And yeah, I think that's a very good example. I mean, is it easy to find the right product, and is it easy to find these examples? I think we're at the very beginning, and as you said, it's a young industry. Some of them will fail, others will not. It has a lot to do about with the management, and but that is what really generates out of that. And I just used the example with we're talking about a 2-bedroom, and then you're going to divide and convert it into 3 beds. That's a pretty easy math, So I think that's a very, very interesting segment, and I hope we could explain that a little bit better to you.
Yeah, thank you very much. Now, Esther, again, we heard the point about, and the challenge is certainly also not just in the real estate, but it's a 50-50 game also on the operational side. You've got a benefit of being the largest player here in the European and US markets. What are your plans for Quarters, and how do you want to grow?
Building on what Rob just said, obviously make sure we have a really great management first. We have upped our game over the past year. I mean, obviously I joined as well. I brought 4 more senior people with me that I worked with previously. We had a great CTO at the beginning of the year. At this point we have brought in quite a few experts from the different fields to make sure we're taking it to the next level. Because we're at the point where we feel we can now grow it to a completely different stage. And to me, once you're by size leader in the space, it's quite straightforward where you take it next. And it's also really in my wheelhouse. And that is, you build a super strong brand, run that is really clearly differentiated in a market that doesn't know brands yet. I mean, the sector is rather young and none of the players has arrived at that stage. And then what we're doing is we're turning our rental model into a rental plus membership model, which I'm really excited about. That's a way for us to add new revenue streams. And it's a great way to retain customers, right? So we want them to feel the product is really sticky. They get something they only can find at Quarters, and they stay with us even if they move out and keep on paying us a nice retainer. So that's something we're accelerating right now. And then the tech build out is something we accelerating this year. We've already started last year, but now it's really ramping up. We have a unique app that grants members access to the building. It manages their contracts, their payments, and helps to connect them with each other. And we're now adding one feature after the other at an accelerated pace to heighten the experience for members, first of all, but also to help us collect more and more data, which we then use to further improve our business. And now, okay, we said we're building a super strong brand. What is the brand proposition we're building this on, and what are the added values we're bringing in there? Well, to me, one of the core insights in this field and looking into the data at Quarters was that we have a diverse set of people. They are very international, but they are all at a similar life stage. So they come to us because they moved to a new city, because they have a new job. Some of them broke up in their relationships. And they are at this transition point where they all need the same things, which makes it so great for us, because we then can program around it and bring in these services that we can turn into additional revenue. And that is like, none of them wants any hassle. So everything has to be like super easy from the moment they book online. They want to meet new people. And then they want to feel like they belong, right? They have a new sense of home. And that is exactly what we cater for. So we start off by offering all the peace of mind services, right? From a flexible move-in date to helping you register at City Hall when you come in from a different country, setting up a bank account, and then organizing all the supplies and cleaning services. So everything is catered for. And then we kind of pull together this killer package of experiences that curates your lifestyle in the city. And the whole goal here is to make you feel like a local within weeks. And I think that's really cool, because I always looked at Airbnb that have this idea of belong anywhere, but they can't really make it work because, you know, on a vacation, you fly in and out, you're never going to belong. But we have this residential product where you can really set down roots. And it's such a cool product to program around. And yeah, if I look at the competitive market, it's always struck me that the competitors are so self-referential in a way. You know, they cater everything around that one building, and it's all about gathering in that one common space around tacos and beers. And I never quite understood that, because, you know, you don't move to a new city because you don't want to move outside of that one building. You want to discover stuff and venture out and, you know, get this new sense of where you're at. And this is what we based our membership around. We call it experience living. So the idea here is that we extend our membership beyond our own building, and we kind of develop this network that sets you up right away. So you go outside, and we partner with the cool cafe at the corner where you have a flat rate on your coffee, and you meet all the Quarters members there. Then the hip bar, we have a flat, you know, an open tap every Friday night. So you go there and there's always like something happening. And again, they have the Quarters logo when you come in. And then we have this network of cool people in town that own a brewery, they own a co-working space and have an entrepreneurial network. They have a gallery, and they curate this exceptional program for our members that is really exclusive to Quarters. And yeah, it's an added value that like no one else brings to the table that I'm quite excited about. And yeah, one of the last additions we've just brought up, which I personally kind of driving, is the rural escape idea, where we said, you know, when you feel stuck in the city, you kind of want to get out of it, at least for a weekend or 2 days. And so we added these beautiful spaces at about an hour outside of town where you can go to and, you know, feel, you know, you kind of now own a weekend home, right? So the idea there is you have an affordable membership on top of an affordable rent with all these benefits, which I think really speaks to the current mindset. Now, all of this community activation is really hard to do. We're bringing in people that have done this before. I've done this before, created these memberships, but landlords aren't set up to do this, right? They're in the business of providing space, not services. And, you know, you can create a lounge space and add amenities, but a lounge space won't become a community space just because you added chairs and tables. You have to activate it. You have to make it exciting and create the network of people to make it there. So one of the many reasons that property owners come and work with us is because we literally switch on the light in their building, right? Because we take hold of it, it becomes alive and people gather there and it's not just sitting empty. And so yeah, with these landlords, we, Ralph already said it, we work with a densification model. It helps to increase their NOI by, yeah, on average, we see 10 to 30%. It can go well beyond that. We convert buildings fully or partially, or we do complete build outs. And now one path of growth for us, which you asked about, is we want to widen our funnel, right? We want to expand faster. And that means on the side of the landlords, we want to be able to be more flexible in working with a lot of floor plans. So we are now adding to the flat share a core product. We're adding studios and 1-bedroom apartments because, you know, some floor plans just call for that. But it also means that on the demand side, we bring in a wider funnel of people like yourself who would like maybe want to connect to people in a town you don't know, but you kind of don't want to live in a flat share anymore at, you know, once you're past a certain stage and you might be in a relationship. And so that's one way of increasing the product range, which we then take to new geographies. And we have quite ambitious growth plans there. Going into new cities. And what we do is once we have a footprint in a city, we call it the mushroom strategy, right? We mushroom out because we immediately want to grow our footprint there and get beyond a threshold of a couple of 100 members because it drives synergies and makes us much more efficient in operations and in marketing, but it also drives the experience. It's just you can cater you know, to people better when you have a bigger group of them. And yeah, and then it's really 2 more things that I have in mind. Well, 3 really, if we look at the pipeline, I guess it keeps us busy to this expansion, but you know, we are playing around with new target groups because what we are showing here is that we can do experience living for this set group of 20, 30 somethings. Why not take it to new target groups like, you know, young families that need a whole lot of services and something convenient to move into, and you know, they don't want any hassle either, or golden agers. Again, there's so much to cater for if you're in the experience living business. Yeah, and then maybe the 2 last outlooks, we have been playing with the idea of adding short-term stays to the portfolio. Just because coming from the idea that we have a global network and we want to activate it by allowing you to live in New York at quarters, but then spend some time at quarters Miami and come back. And that's where the idea came from. And we wanted to maybe do it further down the line, but the current market environment might actually be the very moment to do this. So we're looking at this right now. And then, yeah, the last thing, I come from a tech background. So I've introduced digitization at my last company. So I'm excited to see how tech growth drives our business and drives our growth. And, you know, almost by default, we are building the best in class property management system. We need something that works in Europe, in the US. We're now looking at making it work short term as well. And so we're developing this really complex product that doesn't exist. And to me, it's obvious that we build it to the standard where we can license it out and like drive a new revenue stream through that. That would be my rundown.
Very interesting. There was a lot of points. To be honest, we haven't done a dry run on this, and frankly, by now you sold me the co-living. My wife might have a problem with me moving now into a single tenant building, but no, it sounds quite interesting. Frank, from now more again looking at it from an expansion point of view that Esther just mentioned, I think the one challenge is certainly operating it, and the other question is then where to get product assets for these type of buildings that Esther is looking for. I mean, what type of assets qualify for that?
Yeah, very important question, because I mean, we all believe and want that the asset class grows. It can only grow if the pipeline grows, and we can put into place many of these co-living spaces. Yeah, so which means the pipeline will have to be filled up from multiple sources and widen up compared to what has happened so far. Because traditionally at the beginning, almost all products were conversions of traditional residential. And although this will continue because that can drive NOI, as Esther and Ralph have explained, you know? So this will continue, but that's not good enough. That will not be enough to fill the pipeline as much as possible. So we will see multiple other ways. The most obvious one is, and the easiest from a point perspective of concept, design, or floor plans, is to have ground-up developments. Yeah? So you put into place a brand new building, purpose-built, designed for co-living, which functionally is the best solution. I think we will see that, and we have seen that also in the Quarters portfolio. The next is conversions from other usages. For example, former office space, or which is becoming more and more relevant right now is the hotel market is extremely difficult. It will continue to be in a difficult situation probably for some years. And this is why we will see conversions from hotels to co-living, which very often works well because of the layout of hotels, which is good for co-living. In particular, if you widen up co-living for also studios. And you will, and we are seeing conversions from other products as well. For example, in Brooklyn, New York, Quarters has even converted a former school into a cool co-living location. And that's probably an example which will not work every day, everywhere. But the more attractive and the more accepted the co-living as an investment product grows, the more such solutions will be found. And this is why I'm confident that we will see a lot of co-living developments, which the market is waiting for.
Okay, thank you very much. Looking at the time, we're actually at the end of our panel discussion. The plan was to do somewhere between 30-40 minutes. We're now at 45 minutes. I don't know if there's anything that you would like to say, Ralph, Esther, Frank, anything else that you would like to add? Perfect. I think we tried to give you guys a quick overview in terms of what it means co-living, what it means from an operator perspective, what it means for an investor, and particularly also what are the benefits for tenants. It's a complex topic. It's driven by a lot of the many social demographic aspects that we all sort of feel every day. I think Corona has sort of thrown in another variable of complexity to it. And surprising enough, it's held up quite stable throughout the past few months. We hope we were able to give you a good insight into the topic. I'd like to thank our three panelists, Esther, Ralph, and Frank, for your time. Thanks everyone for attending. We will certainly be sharing more information over the next few weeks and months. And we hope that this panel was interesting for you. Wishing you a very good evening and goodbye.